All right, guys. So this is another example for the moving average phantom here. So we are in the 1 hour time frame here. So we are also in a sell side curve. The whole stuff. That's to say the trend is bearish in the 1 hour time frame. So we are very bearish on the 1 hour time frame. So we can spot a bearish fair value gap here. We mark it out prior to the London time. So let me show you. So we can mark a bearish fair value gap here prior to the London opening time. That's 2 a.m. 2 a.m. New York time. So I'm setting my time. Remember, my time is set to New York time. So prior to 2 a.m., we have this bearish fair value gap here. So we can go right to our 1 minute time frame. So for the 1 minute time frame, this is the moving average phantom here. This is the full context of the moving average phantom. So this sell side liquidity resting below here. So you see how all the candlesticks are above the moving average, even during 2 a.m. So 2 a.m. New York time. So we are looking at that period. If we get close to that 1 hour, this red shaded area here is the 1 hour fair value gap. We are looking very closely if we get to that red shaded area, so we can look for some kind of displacement to the downside, and we get a fair value gap, so we can use for our entry. You see here, it broke this low, right? This low here. See how it broke that low. See how it broke that low. Once it broke that low, it created a fair value gap here. This would have been your entry for the sales. So you'd have gotten entry for the sales here. So let's call this a shift in market structure. Like market structure shift. Let's just use that. Bottom and middle, center. All right. So these are market structure shift. I'm using MMS for that. So we have a fair value gap here. So this is it. And we also have sell side resting here. So if you had missed this is another fair value gap you would have used for your entry this year. This year is another fair value gap you would have used for your entry. Let me use, I don't want to get this chart dirty. So that's another fair value gap there. And also is the fair value gap. So that would have been your entry. And we are targeting this sell side liquidity here. This sell side liquidity resting here. So since it hasn't gotten to that, and you probably missed this another entry here at this fair value gap. So we can call this one here the first stage of the entry, and this is the second stage of your entry. So I've shown you this is the moving average phantom in full context. All right, you see how it sold. You see how that sold. That would have really been a good spot to take a trade. You see, this is where our stop loss would have been. Our stop loss would have been here. Then our take profit would have been here, even below there. So that's the moving average phantom, guys. But for me, I would have placed my stop loss here because this is a swing high. Yeah, this is a swing high here. I would have placed my stop loss there. So that's it for the moving average phantom. So once you get your TP, you're out and you can watch how it drips, how it falls. All right, so that's it, guys.